If I had to buy BMNR today from scratch, knowing what I know about the Ethereum Treasury boom, the dilution risk, and the way this whole digital asset story is being sold to investors, I would not start with the stock chart. I would start with one simple question. Am I buying Ethereum exposure, or am I buying a management team that can quietly change the math underneath me? Because those are not the same thing. Most people look at BMNR and they see a giant Ethereum pile. They see the target. They see the headlines. They see the company moving toward owning a meaningful slice of the entire ETH supply. And on the surface, that sounds exciting, but investing is not about the headline number. It is about what you own per share after the headline is over. And that is where this gets uncomfortable. Today is Wednesday, April 29th, New York time. Comment below what day and date you're watching from, because I want to see how fast this BMNR story changes by the time you hear this. And if you value my content, support the channel by subscribing and comment John AG Best below. So in this video, we're going to walk through BMNR, the Ethereum thesis, the buyback question, the staking income, and the one issue that can turn a great asset into a bad stock. By the end, you'll understand why BMNR can be bullish for Ethereum and still frustrating for BMNR shareholders. So let's get started. Now let's be fair first. BMNR has done something that almost no public company has ever done. It has built a massive Ethereum treasury in a very short period of time. Based on recently published numbers, the company now controls a little over 5 million ETH, which is a bit over 4% of the entire Ethereum supply, and its combined crypto, cash, and side investments are sitting in the low $13 billion range. That is not small. That is not a hobby project. That is not some tiny miner adding crypto to a press release because the stock needed excitement. This is a real treasury strategy. The company has nearly $1 billion of cash, a large ETH position, small Bitcoin exposure, and side investments connected to newer technology themes. It also moved its common stock onto the New York Stock Exchange this month, which matters because bigger listings can bring bigger funds, cleaner access, and more institutional screens. But again, impressive does not automatically mean shareholder-friendly. And this is the trap. A company can buy the right asset the wrong way. It can be early to a powerful theme and still damage investors through bad capital allocation. It can grow the total pile while shrinking the value of your slice. That's the part nobody likes talking about. BMNR's stated mission is basically to build one of the dominant Ethereum treasuries in the world. That is why investors watch the 5% ETH supply target. That is why every new purchase gets attention. That is why the story feels big. If you believe Ethereum becomes the settlement layer for tokenization, stablecoins, and future machine-to-machine finance, then yes, a public company holding a mountain of ETH sounds powerful. I get it. I'm not dismissing that. Ethereum is not just another meme ticker. It is where a lot of stablecoin activity lives. It is where tokenized asset experiments keep showing up. And from recent market updates, traditional exchanges and major financial players are still pushing deeper into tokenized securities, tokenized funds, and blockchain-based settlement. So the ETH thesis is alive, but BMNR is not ETH. BMNR is a stock wrapped around ETH. And that wrapper comes with share issuance, compensation plans, market discounts, investor sentiment, operating expenses, custody risk, staking risk, and management judgment. That last one is the big one. Because when BMNR trades above the value of its net assets, selling shares can make sense. You sell expensive equity, buy more ETH, and if the premium holds, existing holders can benefit. That is how these treasury vehicles can become powerful. The market gives them a premium, and management uses that premium as fuel. But when BMNR trades below the value of what it owns, the playbook changes. At that point, selling more shares can become value destructive. You are no longer using expensive paper to buy discounted assets. You are using discounted paper to buy more of something the company already owns. It's like selling $1 for less than $1, then bragging that you bought more dollars. That is not strategy. That is arithmetic. And this is why the market is getting irritated. BMNR has authorization for a large repurchase program, around $4 billion in total capacity. The company has said that if shares trade below intrinsic value, it wants the ability to retire stock in a way that helps shareholders. Good, that's exactly what investors want to hear. But here's the catch. An authorization is not the same as a buyback. Permission is not action. A headline is not a retired share. So if the market sees a repurchase program on one side and more capital raising on the other side, investors start asking, wait a second, which direction are we actually going? Are we shrinking the share count because the stock is cheap? Or are we expanding the share count because the ETH target is more important than the shareholder? That is the whole debate. Now, some people will say, well, BMNR is helping Ethereum by locking up supply. And that is true in a broad sense. The more ETH that gets staked or held in long-term treasuries, the less loose supply is floating around for quick selling. Recent staking data shows roughly a third of ETH is now locked in staking, which is a major change from the early proof-of-stake years. That can support the network. That can help the long-term supply picture. That can make ETH more interesting. But shareholders did not buy BMNR to donate liquidity to Ethereum. They bought BMNR because they wanted an investment return. And those two goals can diverge. The Ethereum community might love a company that keeps buying every dip. Shareholders might not love it if every dip is funded by selling more stock below asset value. See the difference? One group cares about total ETH locked away. The other group cares about ETH per share. And ETH per share is what matters. If total ETH rises but your ownership claim is diluted, then the press release looks better while your economics may not. That's why direct ETH ownership becomes such an uncomfortable comparison. If you hold ETH yourself, you don't have a corporate treasury making issuance decisions above your head. You don't have a discount to asset value. You don't have to wonder whether the next announcement helps you or just helps the total holdings chart. You just own the coin. Now, that doesn't mean direct ETH is safe. Please, let's not be silly. Ethereum is volatile. The company's own filings warn that crypto markets can move violently, that acceptance of ETH can change, and that digital asset platforms are still a developing, risky part of the market. Those are real risks, not footnotes for lawyers. But with direct ETH, the risk is cleaner. With BMNR, the risk is layered. You have ETH risk, plus equity risk, plus dilution risk, plus execution risk, plus the risk that the market stops paying a premium for the structure. And once that premium disappears, the stock becomes harder to defend. Now, the best thing BMNR has going for it right now is staking. This is the part of the story that deserves credit. The company has staked close to 3/4 of its ETH, and annualized staking revenue is now in the few $100 million range. If the whole ETH pile gets fully staked through its platform and partners, the projected reward number could be meaningfully higher. That matters. It means the Treasury is not just sleeping in a vault, it is earning yield. It means BMNR can potentially cover expenses, support operations, and build an institutional staking business around the asset base. The launch of its Maven platform and the Peer 2 acquisition show that management is trying to own more of the staking infrastructure, not just the coins. That is smart, if done properly. Because staking income can improve the story, but it cannot erase dilution. A few $100 million of annualized rewards sounds great until investors ask how many shares were issued to build the base, producing those rewards. Yield is only valuable if the shareholder actually captures it. And that's the part to watch. According to recent filings, BMNR has more than 500 million common shares outstanding before a small resale registration tied to the Peer 2 deal. That specific resale registration does not bring new money to the company, because those are already issued shares being registered for selling holders. But it reminds investors of the bigger reality. This story has been built with equity, and equity supply matters. A lot. Earlier filings also warned investors that future equity offerings can dilute shareholders, that management has broad discretion over proceeds, and that at-the-market share sales can happen at changing prices and changing amounts. That is not an attack. That is the company's own risk language in plain English. So when shareholders worry about dilution, they are not inventing a problem. They are reading the structure. And the structure says management has flexibility. Flexibility is wonderful when it is used well. Flexibility is dangerous when the market no longer trusts the decision maker. That is why incentives matter. If the scoreboard inside the company is total ETH accumulated, then management may feel successful every time the Treasury number climbs. But if the scoreboard for shareholders is value per share, then the same action might feel painful. Both sides can point to the same announcement and see something different. Management sees progress. Shareholders see dilution. That is how trust starts to crack. Now, I want to be balanced here. The skeptical case is not the only case. If Ethereum goes on a strong run, BMNR could recover quickly. A company sitting on this much ETH will not be ignored if the asset moves hard. If the discount closes, if buybacks begin, if ETH per share improves, and if staking revenue keeps building, the stock could suddenly look much better. So no, this is not a death sentence. This is a capital discipline test. And that test is happening right now. The market is basically asking BMNR to prove that it is not just chasing the biggest ETH trophy. It wants proof that management understands per share math. It wants proof that the buyback authorization is not just decorative. It wants proof that the company can pause, think, and say, under this valuation, the best ETH purchase might actually be our own stock. Because if BMNR trades below the value of its holdings, buying back stock can be like buying ETH at a discount through the company itself. That is the point. And this is why peer behavior matters. Across the digital asset treasury space, The smarter operators understand that the premium is the engine. When the premium disappears, you don't keep pressing the gas just because the old model worked last quarter. You adjust. You protect per share value. You wait for better conditions. You use the balance sheet intelligently. BMNR has to show it can do that. Otherwise, the market may decide that the company is good for Ethereum, but not necessarily good for shareholders, and that would be a painful label. Because the whole reason to buy a treasury stock instead of the underlying asset is that the wrapper should add something. It should add access, yield, tax efficiency, institutional scale, better capital allocation, or some kind of premium engine. If the wrapper adds complexity without adding returns, investors will eventually simplify. They will buy ETH. They will stake ETH. They will move on. So what should you watch from here? Not just the ETH price. Watch ETH per share. Watch the share count. Watch cash. Watch whether the repurchase authorization is actually used. Watch whether new capital is raised below asset value. Watch whether staking rewards show up as real shareholder benefit. Watch whether management talks more about per share value or more about trophy milestones. That will tell you the truth. And also, watch volume. When a hot story cools, volume often tells you before the narrative does. If traders stop showing up, the premium can get harder to rebuild. And if the premium gets harder to rebuild, every future raise becomes harder to justify. This is why I think BMNR is at a fork in the road. One path is disciplined, buybacks when the stock is cheap, ETH purchases when the math is accretive, staking growth that benefits owners, clear communication around value per share. That version of BMNR could still become a very important Ethereum treasury vehicle. The other path is simple accumulation at almost any cost, bigger ETH pile, more headlines, more issuance, more frustration. That version might still help Ethereum's supply story, but it may leave shareholders wondering why they didn't just own the asset directly. And if you're successful, share your success story in the comments so others can stay motivated. So here's my view. BMNR is not a simple bad company story. It is more complicated than that. It owns a serious amount of ETH. It has real staking income. It has cash. It has visibility. It has a huge narrative. But the stock needs discipline now more than it needs another victory lap. Because in markets, there is a moment when growth stops being impressive if the price of growth is too high. There is a moment when investors stop clapping for bigger numbers and start asking, what did I give up to get them? BMNR is approaching that moment. Maybe management responds correctly. Maybe buybacks start. Maybe dilution slows. Maybe ETH rallies and the whole thing resets higher. That can happen. But if the company keeps expanding the pile while shareholders feel their slice getting thinner, then the market will punish the wrapper, even if it still respects Ethereum. That is the key. Ethereum can win and BMNR can underperform. BMNR can own more ETH and still fail the per-share test. A treasury can look bigger and still make the investor feel smaller. So don't just watch the pile, watch your slice. Because your slice is the only part you can actually spend later personally. This video is for education and market discussion only. I am not your financial advisor, and this is not a recommendation to buy, sell, or hold BMNR, Ethereum, or anything else. Use it as one piece of research. Check the filings yourself, understand the risks, and never let a shiny treasury headline make a decision your portfolio has to live with.